This is Pokling 888 Telemetrading daily market research and data analysis. Here are the updates on Forex. Euro to US dollars. The euro bounced back above 1.13 US dollars at the end of November, helped by a weaker US dollar and falling bond yields as investors fear that a new and possibly vaccine-resistant coronavirus variant could hurt the ongoing economic recovery. Still, the bloc's currency remained close to its weakest level since July 2020 amid concerns over potential new COVID restrictions across Europe and as investors see the US Federal Reserve tightening monetary policy faster than the other major central banks. The minutes of the ECB and Fed policy meetings showed officials in Europe agree the very generous monetary policy support to the economy would need to be reassessed at some point in the future and reiterated once again that the uptick in inflation was seen as temporary, while the US Federal Reserve signaled it was ready to raise interest rates if inflation continued to run high. GBP to USD or Great Britain pound to US dollars. The British pound changed hands at 1.33 US dollars at the end of November, having touched its weakest level since December 2020, as investors rushed to safety amid panic over a new COVID-19 variant and as doubts arose on whether the Bank of England will raise interest rates at its December meeting. At the same time, the US dollar remained close to a 16-month high on rising expectations of rate rises next year in the US. Governor Andrew Bailey said on Thursday, central bank took risk when they sought to provide guidance on what is likely to happen with rates after being accused by some investors of sending a wrong signal about the likelihood of policy tightening earlier this month. He has also voiced concerns about the inflation outlook and the risk to growth, taking a more careful tone than previously. From Australian dollars to US dollars, it decreased to a 12-month low of 0.71051 amid Omicron uncertainty. The Financial Times reported that COVID-19 vaccines are unlikely to be as effective against the new variant as they have been against the Delta strain. Meantime, the World Health Organization said Monday Omicron posed a very high risk of infection surges. Locally, Australian authorities said that an international traveler who was most likely infected with the Omicron variant spent time in the community. From US dollar to Japan yen, the Japanese yen jumped toward 113 per US dollar on Tuesday as investors bid up safe haven assets after Moderna CEO Stephanie Bancel said that he expects existing vaccines to be less effective against the Omicron variant. The WHO also warned a very high risk of infection surges from Omicron, with several countries, including Japan, quickly introducing new travel restrictions. Meanwhile, Japan confirmed its first case of the new variant involving a person who traveled from Namibia and arrived at Narita Airport. Still, the yen remained close to multi-year lows amid widening policy divergence between Japan and the US, with the Federal Reserve signaling a hawkish pivot, while the Bank of Japan repeatedly stated its commitment to retain easy monetary policies to achieve its 2% price stability target. US dollar to Chinese yuan. The offshore yuan edged higher toward 6.3750 per US dollar on Tuesday, remaining resilient against a backdrop of a strong dollar and current uncertainties over new COVID variant. Analysts argue that the Omicron variant would not have a major impact on China due to the country's strict virus containment measures. The yuan has also been supported by a sustained corporate demand for the local currency and a growing trade surplus. Meanwhile, China's forex regulators said recently that it would expand the scope of bank's foreign exchange derivatives business, intended to encourage risk neutrality among market participants and avoid directional bets on the local currency. The gold price update. Gold edged up above $1,790 an ounce on Tuesday as safe haven assets gained after Moderna CEO Stephanie Bancel said that he expects existing vaccines to be less effective against the Omicron variant. Earlier, the South African doctor who first raised the alarm over the new strain described the symptoms as extremely mild, while the World Health Organization said it will take weeks to understand how the variant may affect diagnostics, therapeutics, and vaccines. Elsewhere, President Joe Biden said on Monday that the U.S. was in a good position to control Omicron's potential spread without having to resort to lockdowns or more travel bans for now. Meanwhile, Federal Reserve Chair Jerome Powell told the U.S. Congress on Monday that the new variant poses a threat to the economy, citing downside risks to employment and economic activity and increased uncertainty for inflation. Here's the update on the price of gold at exactly 7:05 p.m. Philippine Standard Time. The gold price per ounce went up 10.43 US dollars or 0.58% to close at a price of $1,795.44. Here are the updates on commodities. For crude oil, WTI or West Texas Intermediate crude futures plunged more than 3% toward $67 per barrel on Tuesday, the lowest in 12 weeks after a report raised doubts over the effectiveness of existing vaccines against the Omicron variant. Moderna CEO Stephanie Bancel told the Financial Times that COVID-19 vaccines are unlikely to be as effective against the new variant as they have been against the Delta variant. Oil prices crashed more than 10% on Friday as the new variant sparked fears of the fresh lockdowns and more travel curbs and added to concerns over a projected inflated crude surplus early next year after the release of emergency reserves by major oil-consuming nations. Meanwhile, analysts speculate on a possible output halt and even a slight cut in production by OPEC Plus as they expect the group to justify such actions in light of recent developments. Here is the updated price of crude oil at exactly 7:05 p.m. Philippine Standard Time. The crude oil per barrel went down to 1.88 points or 2.69% to close at a price of 68.07 US dollars per barrel. In USA, a California federal judge fined the Nari Capital, along with its owners Travis Kapson and Arnab Sarkar, more than 4 million US dollars for operating a pooled foreign exchange investment firm, the Commodity Futures Trading Commission said Monday. His default judgment order follows a CFTC complaint filed in 2019 against the Nari Capital and the two men behind it over claims that they fraudulently raised 8.3 million US dollars from at least 28 victims. The settlement involves charges that from August 2012 to December 2019, the defendant solicited participants to invest with the Nari, misrepresenting the past profitability of its forex trading. Capson and Sarkar were also charged with acting as commodity trading advisors and associated persons without obtaining the required registrations. Furthermore, the defendants didn't provide the required disclosures concerning client testimonials on the Denari website, nor the hypothetical disclaimer required by CFTC regulations. Trying to scam the NFA, Denari and its proprietors have also been charged by the CFTC with making false statements to the National Futures Association, or the NFA, when submitting annual CTA registration updates. The findings state that throughout their involvement with the Nari, Capsons, and Sarkar, told NFA representatives that the company had been trading forex with proprietary funds since 2015 and that it did not trade forex for third parties until 2019. Here are the updates on the stock market of the different countries. In US stock futures tumbled anew on Tuesday after Moderna CEO Stephanie Bancel said that he expects existing vaccines to be less effective against the Omicron variant. Dow Jones futures plunged 1.1%, while S&P 500 and Nasdaq 100 futures each lost about 0.8% and 0.3% respectively. The reversal came after the three major averages rebounded in a broad market rally on Monday as President Joe Biden announced that economic lockdowns are currently off the table and there will be no new travel restrictions. Moreover, the South African doctor who first raised the alarm over the new strain described the symptoms as extremely mild, while the WHO said it will take weeks to understand how the variant may affect diagnostics, therapeutics, and vaccines. Meanwhile, Federal Reserve Chair Jerome Powell told Congress that the Omicron variant poses a threat to the economy, citing downside risks to employment and economic activity and increased uncertainty for inflation. In the United States Stock Market Index, or the US 30, the price went down or fell down $406.42 or 1.16% to close at 34,729 US dollars and 52 cents. In Euro area, the Eurozone consumer price inflation is expected to accelerate to 4.9% year on year in November 2021 from 4.1% in the previous month and above market expectations of 4.5%, a preliminary estimate showed. That would mark the highest rate of inflation since July 1991, coming in well above the European Central Bank's target of 2% and raising concerns about growing inflationary pressure across the bloc. Energy costs should rise sharply, 27.4% versus 23.7% in October, followed by solid increases in prices of services, 2.7% versus 2.1%. Non-energy industrial goods, 2.4% versus 2%, and food, alcohol, and tobacco, 2.2% versus 1.9%. Inflation in Europe's largest economies also accelerated to multi-year highs, with sharp rates being recorded in Germany, 6% versus 4.6%. Spain, 5.6% versus 5.4%. Italy, 4% versus 3.2%. And France, 3.4% versus 3.2%. This is the Euro area stock market index, where it fell down to 1 point or 0.02% to close at 4,054 euro. In China, the official NBS manufacturing PMI for China rose to 50.1 in November 2021 from 49.2 a month earlier, beating market estimates of 49.6. This was the first growth in factory activity since August amid easing power shortage and a sharp drop in some raw material prices. Both output 52 versus 48.4 in October and buying levels 50.2 versus 48.9 increased for the first time in 3 months, while new orders 49.4 versus 48.8, export sales 48.5 versus 46.6, and employment 48.9 versus 48.8 all fell at slower rates. Meantime, input costs rose much softer, from 52.9 to 72.1, amid a plunge in selling prices 48.9 to 61.1. And looking ahead, sentiment improved slightly, 53.8 versus 53.6. A series of recent policy measures to strengthen the guarantee of energy supplies and stabilize market prices have shown results, said NBS senior statistician Xiao Xinghe in a statement. With the recovery in the global economy and the approaching Christmas season, foreign trade has also continued to improve, he added. In Japan, the Nikkei 225 index tumbled 1.63% to close at 27,822, while the broader Topix index lost 1.03% to 1,928 on Tuesday, as investors dumped shares toward the close after Moderna CEO Stéphane Bancel said that he expects existing vaccines to be less effective against the Omicron variant. His comments prompted heavy selling on risk assets as global equities, commodities, and risk-sensitive currencies all plunged in Asian trade. Some of the Japanese market's laggards include SoftBank Group had losses of 2.87%, Hitachi 4.05% losses, Fast Retailing 4.4% losses, Nintendo 2.42% losses, and Fujitsu 2.26% losses. The Japanese government suspended entry of all foreign visitors starting from November 30 due to the Omicron variant. This is the Japan Stock Market Index, where it depreciated 462.16 yuan or 1.63% to close at a price of 27,822. In Austria, the Industrial Producer Price Index in Austria climbed 13.9% year on year in October 2021, following a revised 10.6% increase in the previous month. It was the largest increase in producer prices since records began in January 2000, mainly boosted by cost for energy 31.8% and intermediate goods 15.6%. Additional upward pressure came from consumer 2.3% and capital goods 1.6%. On a monthly basis, producer prices jumped 3.1% in October. In the Philippines, this is the GDP report. The Philippines economy advanced 7.1% year on year in quarter 3 of 2021, slowing sharply from an upwardly revised 12% jump in quarter 2 and compared with market expectations of a 4.8 expansion due to tough lockdown restrictions to mitigate rising cases of the Delta variant and low base effect from last year, with both private consumption 7.1% versus 7.3% in quarter 2 and fixed investment 16% versus 38.8%, growing at softer rates. Net external demand also contributed negatively to the GDP as exports grew by 9% versus 27.8% in quarter 2, while imports went up at a faster 13.2% versus 39.8%. Meanwhile, government spending rebounded sharply 13.6% versus negative 4.2% on optimizing the 2021 budget. On the production side, activity slowed strongly for construction, 16.8% versus 27.1% in quarter 2. Transportation, 14.8% versus 24.7%. Accommodation and food service activities, 11.5% versus 56.7%. Manufacturing, 6.3% versus 22.2%, and real estate and ownership of dwelling 4.7% versus 16.7%. Meantime, wholesale and retail trade rose faster, 6.4% versus 5.4%. And this is Emmy reporting.